Nvidia and other AI-linked stocks are falling sharply today, sending waves of fear through Wall Street. Investors who once believed that the AI boom could carry markets endlessly higher are suddenly asking, is this the beginning of the end, or just a short-term correction? In this script, we'll explore the root causes of today's sell-off, connect them to the broader economic backdrop, and examine whether the AI revolution is already losing steam. Along the way, we'll analyze parallels to past bubbles, examine the structural forces propping up markets, and ask whether the world's biggest tech story is about to unravel, the drop in AI stocks. Today's market action centers around Nvidia, Dell, and other AI-related names. Despite Nvidia's impressive financial performance in recent quarters, the stock stumbled when news broke that Alibaba is designing its own AI chip. This highlights the risk of competition in a market that has, until now, been dominated by a small number of U.S. players. Investors are worried that demand for Nvidia's chips could slow if major buyers begin sourcing alternatives. Meanwhile, broader AI enthusiasm has cooled. After months of relentless gains, even minor negative news has been enough to trigger large sell-offs. This is what market veterans call a sentiment shift. We'll unpack how markets move from euphoria to caution, and why even great companies can see their stocks tumble during this transition. The bigger market picture. Beyond the AI story, the market as a whole is showing signs of fragility. Stock indexes recently hit record highs, but valuations are stretched and economic uncertainty remains. Bond spreads between corporate debt and treasuries have compressed to near historic lows, suggesting that investors are taking on more risk than usual. At the same time, September is historically a weak month for stocks, often bringing volatility after the summer lull. With central banks signaling caution, any shift in inflation or employment data could rattle markets. We'll compare this environment to past cycles, such as the late 1990s tech bubble and the credit boom before 2008, to see what lessons might apply today. Bubble or blip? The central question, is AI another dot-com bubble, or is this just a temporary pullback? On one hand, AI is driving enormous investment, but studies suggest that the majority of companies experimenting with AI have yet to see real financial returns. This mismatch between hype and profitability echoes past bubbles. On the other hand, the underlying technology is transformative, with applications across medicine, finance, logistics, and more. This section will explore both sides of the debate, using historical parallels and today's market data to argue whether AI is entering a bubble phase or simply experiencing the kind of growing pains that come with every major innovation. What happens next? Looking ahead, markets will focus on the Federal Reserve, inflation reports, and jobs data. If inflation continues to cool, the Fed may move towards rate cuts, which could reignite optimism. But if inflation remains sticky, the Fed will hold rates high, putting more pressure on stocks. At the same time, competition in AI will intensify as companies like Alibaba, AMD, and others try to take market share from Nvidia. Investors will need to watch earnings reports closely to see whether AI demand remains as strong as expected, or if cracks are beginning to show. We'll conclude this act by stressing that volatility is likely to remain high, and that investors should prepare for both scenarios, renewed growth or a sharp correction. Lessons from history. Every market cycle has its defining themes. In the late 1990s, it was the internet. In the mid-2000s, it was housing. Today, it's AI. Each cycle brought extraordinary opportunities, but also extraordinary risks. Investors who stayed level-headed, avoided hype, and focused on long-term fundamentals were able to navigate past booms and busts. The same will be true this time. The lesson is not to avoid AI, but to approach it with caution, discipline, and an eye on the bigger picture. Markets are cyclical, and even the most revolutionary technologies experience periods of volatility before proving their long-term value. If you enjoyed this breakdown of today's AI stock sell-off, don't forget to like and subscribe. Comment below. Do you think this is the bursting of the AI bubble or just a healthy correction before the next wave higher? Your thoughts could be featured in our next video. And stay tuned, because tomorrow's headlines could be even more dramatic. This is Felix. See you next time.